The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. The S&P up 3.5 points. Enough to take your head off. 1.8 billion shares. So another day of tight trading. Nothing approaching a 30-point move in the S&P yet. So still narrow volatility. As we see today, up 3 points, not that big a deal. Would have been a lot bigger to me if we would have seen some volume come in. But starting the show at 1.8 billion shares, again, shows very light and variable trading, either to the upside or the downside. Now, we did get down to 2072. I was looking for 2070 on the S&P cash. So is it close enough to get there? It could be. But I'm not expecting a lot of movement to the upside. There's no real catalyst that I see out here. There is not a lot of short interest. There is in a handful of stocks. But for the most part, there isn't a lot to get people going. A few stocks will have some short covering rallies, and then they fade and fizzle within a couple of days. And, I had one that kind of took me to the woodshed for a couple of days. A couple of days later, it was flat. A couple of days later, I'm now in the money solidly. And I suspect that when all said and done, this is going to be maybe one of my biggest winners of the year. A lot of times people just don't give enough time and enough leeway for a trade to go their way. Not all the time are you going to top tick or bottom tick a stock. So a lot of times it's all about whether or not you have the courage of your convictions to sit on your hands long enough for you to make the big money and not, as they say, try to pick up dollar bills in front of a steamroller. If you're going to be doing that, you probably ought to be picking up $100 bills, not dollar bills. I suspect that the steamroller's out there, albeit extremely slow, and it's not headed north. It's headed the other way. It's headed south. But that is an opinion. It is not a fact until it happens. Other people can have other opinions and interpret the facts other ways. Mine is based on experience, and at least my experience, which may vary from other folks. Mine's also based on looking at the broadest part of the market, and that is individual stocks. I don't spend a lot of time talking about the S&P and the NASDAQ on the show, as you will figure out. Mostly what I'm looking at each day and over time, developing an opinion based on seeing how many stocks test previous highs on lighter volume, how many break out, how many go to the lows and break lower, and overall a composite of stocks going lower. On the indexes, of course, you'll have a lot of stocks that are heavily institutionally owned, and they tend to skew the market a little bit. Anyway, we're going to see how we do before the end of the show. But 1.85 billion shares here in the first couple of minutes of the show, and we're up 3.5 points on the S&P cash, which is not going to chase me out of any of my short positions. We did go short last week on Tuesday. I'm 100% dedicated to the short side now in my portfolio, and my guess is that we're going to have a lot of days like this that all look like the market's turning around. And the next few days, we're going to be just a little bit lower, And probably by September, we're going to wake up and see that we're down maybe 200 points. I'm looking for somewhere around that 1900 level as the first stopping point if the market does develop like I think. If we have some kind of huge 50-point down day on the S&P, that would probably more make me think that we had an exhaustion day and the market was ready for some kind of significant move. As long as we have these 5, 10, 15-point down days, a little bit of a reversal, and then the next day or 2 days later, we get right back into selling. Probably tells me everything we need to know, which is this is a kind of a paper cut market. It never really feels like you're going to lose an arm or a leg, but you do tend to, over time, it just never quits. It just keeps drip, 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 that constant drip. And over time, could cause a little bit of additional pain. But I do digress. In the meantime, it's time for...
And it's all just a little bit of history repeating.
It is, and kind of funny, because if we go back to today, June 9th in 2005, Greenspan was giving some famous testimony that would become incredibly prophetic in the next few years. He says, although a bubble in home prices for the nation as a whole does not appear likely, there do appear to be, at a minimum, signs of froth in some local markets where home prices seem to have risen to unsustainable levels. And of course, it went on for a good 2 years after that. Everybody knew what was happening. Everybody tried to point to the other way. Greenspan inoculated himself a little bit on this day. But of course, it takes a lot of courage to stand up and tell everybody to stop it. You're insane. Just quit it. And of course, you get, whether it's Yellen over the last few months saying that biotechs are in a horrible bubble and they should stop. Everybody says, get off my lawn. Quit crashing the party. I don't want you dropping the Baby Ruth in the punch bowl. Get away, Mrs. Yellen. You don't know anything about stocks. Shut up. Get back to the FOMC meeting and don't raise rates either. And you get a lot of that. And I think these people over time just kind of slowly give up and go along to get along. But Alan was basically bringing this up in testimony. Actually runs about 2 hours. I watched about half of it this morning, just as a reminder to me that things rarely change in the marketplace. And if we go back to 1929, the summer of 1929, you had the equivalent of Alan Greenspan and Janet Yellen telling everybody about the problems with the market, and they all got shouted down. I suspect that anybody that comes along that would go against what is making a lot of people at least rich on paper will get shouted down. And it's nothing new, whether it was in 1929, whether it was in 2000, 1996, is that the irrational exuberant speech? I think 1996 or 1996, the irrational exuberant speech. Of course, the market continues on. He shut up after that. In 2005, of course, he talked and shut up fairly quickly after that. No one wants to hear it, and that's why patterns in the market tend to repeat so often. There is a greed, especially in bubbles, that seems to be very, very tough to overwhelm just because of how many people are more than willing to shout you down when you actually speak anything that reeks of reality. But we'll move on. Paul Volcker, of course, was out this morning. One of the reasons why I was looking at the testimony from Greenspan, he was out this morning somewhere. He must be overseas because it came out like 6 o'clock this morning. I didn't see where he was at. But he's, of course, the former chairman of the Federal Reserve, one of the few guys to actually give us the horrible medicine that tasted bad that worked out so well for the next 20 years. He basically was out warning about many of these states that are acting just like Detroit. You'd think that we'd learn from this, but of course, if you basically say anything against people that have insane beliefs that have been proven to be wrong over time, like Detroit, like other horrible cities that are decaying and falling apart, it can't be because of the policies, because the policies were all about how big a heart everybody had, how great that they would be. Well, of course, they always end up in defeat and disaster, But you can't say that why they're happening out there. Anyway, he's basically telling everybody to watch out that Chicago, a few other cities and states have some huge problems, and that he thinks that if we get through what we have now, it's just going to get worse. While states have returned to better health after the depths of the financial crisis and recession of the last decade, many remain under heavy pressure with overall tax revenues adjusted for inflation barely covering their pre-recession peaks. But he got into a lot of why we see places like Detroit end up looking like Beirut in the 1980s, that people just don't want to, they don't want to face the truth. They can't handle the truth. Anyway, Paul Volcker today trying to give us a little bit of a taste of that medicine he gave us in the 80s. My guess is that no one will listen. He just doesn't have the power now. And there, he could just tell him to stick it, and he did. And we were better for it. We need another Paul Volcker coming along. Unicorns. For people that don't say that there are bubbles, the bubble's probably less in the actual retail part of the market. That's probably because there aren't that many retail traders. We continue to see the ratings of places like CNBC hit their all-time lows. And what I mean by all-time lows, when 1992 lows, where people aren't watching. That's when CNBC actually started. We continue to see the probably because of, I think a little bit is because of the programming and no one's buying it anymore. They tend to be incredibly Pollyannish. Yesterday, it was absolutely sickening to watch their coverage of Apple, but we'll get in that in a minute. Right now, there are 102 unicorn companies. Those are companies that basically have no revenues, and some of them don't even have products, but are worth $1 billion in what people are paying for additional shares of these companies. What is most interesting is if they wipe out these venture capital people, where are the new companies going to get their cash in the future? They are both, and mostly with some 7,500 startups right now, just in Silicon Valley, and some 15,000 across the world. Where are those companies going to get it when everybody flushes their money down the toilet on these? And that is my bigger fear out here, is that basically we get a bunch of companies that are just now getting started, like Uber, already worth $45 billion. And if there was any kind of value metric put on these things, maybe they'd be worth $1 billion or $2 billion. We see companies like Tesla worth probably 5, 6, 8 times, 10 times what they would be worth if they grew at the rate that they're growing now. 15 years, maybe they'd be worth their current price. There are enough of these out here to make you know that you should at least be nervous if you are not bearish. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
If you were out there, the Shark Tank investor Kevin O'Leary was being asked about Apple's new music streaming service. He had a couple of pithy things to say, and I'm going to play them here in a minute. But kind of interesting just because I think so many people do not put on the business hat when they're looking at news as it comes through. And he was rather pithy today. And I've pretty much been saying this about the music business for the last year and a half. We'd been short in the Tech Insider on Pandora just because I was pretty sure that there was absolutely no way that the company would ever make any money. It's a horrible business, and I've been saying so. If any of my readers would call in and verify it, I'm sure they would. But just a horrible, horrible business out here. But we've been watching CNBC and their coverage. I fast-forwarded through it yesterday. It was pretty annoying to see all the hosts basically go, well, why isn't this great? And, of course, quickly the people in the know, like Carol Swisher, would say, Google's done it. Microsoft's done it. It's nice that they fix these things, but everybody's already done it. There's nothing new here. These aren't the droids. Just move along. It was just very interesting to see how despondent the press was to not have just the easy story that they've had in the past, not to even understand it. And finally, at least somebody out there today, I think, gets it.
Does this change my mind about leaving the stock or buying more of it? And to me, the whole thing is a giant nothing burger. Who cares?
And he basically said it doesn't really change his thesis. It's not a positive. It's not a negative. And the reason why is what I've been telling people in my Tech Insider forever, which is this is a pretty horrible business to be in. And maybe one day someone figures it out. like the airline stocks finally figured out that, you know what, if we make an artificial problem with supply, we can raise prices. Eventually, I suspect there's going to be some investigation, and we're going to find out that there was price fixing involved all over. I lived in Cincinnati for a number of years, 6 or 7, and they had the single highest price to fly anywhere per mile in Cincinnati because Delta owned every single gate. One airline came in, bought a gate while I guess Delta was asleep at the wheel, and they then changed all their flights to basically take off at the same time, anywhere plus or minus 1 hour of that airline, so that that airline would have to sit on the tarmac for an hour and a half before they could take off, and drove it out of business. Horrible business, just a horrible business with horrible folks, but nothing touching what the music business is. Anyway, Kevin O'Leary continues.
What a crappy business music is. I mean, every part of it sucks. You can't make any money. It's not that big a business at all. And frankly, to get a whole bunch of investors like me focused on this, I don't know why.
Anyway, he goes on, but I thought it was at least humorous. But very interesting to see somebody that basically is a business station so focused on a part that will not make business. Of course, if you know a business like that, then time to short. The stories and ways that Wall Street makes money is mostly out there beating on truths that are untrue. And I always loved what George Soros had to say about this matter. And he said, all of economic history is one lie and deceit after another. Your job is to get on why that is being perpetrated and get off before it's discovered. Now, not everything is horrible, and I'm not a skeptic on everything. I'd say 95% skeptic, because 95% of the time there's either an exaggeration or an all-out lie on stocks. You need to know which one before you stick your money in it, if you're going to probably be in it longer than 30 minutes. But it is pretty tough to go and figure out, especially after the last day, where Apple gets amazingly amount of free advertising time because it's so easy to cover for a station that has to put in 9 hours or 10 hours. What is it? 10 hours of programming a day, I think, on CNBC. And you know, if you got to fill that void, then you think it's an easy day to go out there, and then you line up all these folks. Like yesterday, and they'll go, Apple did it. I mean, Microsoft did it. Google's done it. There's nothing new here, and it's time to just move along. Anyway, we get a lot of stocks to look at in the last half of the hour. We'll go back to it and keep an eye on the S&P, which is up 3 points and change, 1.94 billion shares.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And after this show, of course, 2 hours of Tom O'Brien. And then in the 5 o'clock hour, we've got Andy Heck talking about commodities. He's got a bunch of new articles out on Seeking Alpha. The guy must do nothing but write. We need to find him a girlfriend or something. He's good. He's spending far too many hours writing out here. But he's got a good one about the airlines set for a rough landing. So you can check that out on Seeking Alpha. And show Andy just a little bit of love or hate. I guess if you're along the airlines, you can send him some hate mail. And we continue on. Anyway, just seeing if anything's really happening in the market. And then for the most part, pretty quiet day out here. And get me my quotes back up here. I did something wrong. Interesting article. Also on Greek tragedy, takes a new twist he's got up there. But I do wander away from what I wanted to talk about. Let's see, what do we have out here? Netflix is up about 3%. Let's take a quick look at that. NFLX. A lot of discussion and super fanning the flames on CNBC today. As I fast forward it through, they are just so enamored about a stock split, unclear of what it would be, a 5 or 6 to 1. But certainly that's giving it a little juice, not a lot of volume today. The last big volume day that has not been retested and suggests that this is where this thing will pull back is the 16th of April, where this thing had almost 15 million shares and gapped up with all the energy in the world, continued to move. Netflix, over the last couple hours, last couple of days, has spent a great deal of money, one for buying a Brad Pitt movie. The other one is buying a TV series that had been knocked off the air, mostly because of political correctness in Europe, or actually by the BBC. All the gentlemen of what is a kind of a car guy show over there have decided to, from what I've read, I don't know if they've signed yet, but we'll be doing the car show on Netflix. And I think Netflix is probably a good opportunity out here to snatch a lot of people from the BBC to online streaming of video with this show. It was one of the most popular shows on the BBC. And one of the things that, especially from working in Hollywood for, well, all the 90s, let me put it that way, and a little bit more, was that if you're like a producer, you know, you can be replaced pretty quickly. If you're a lighting guy, you can be replaced pretty quickly. If you're the talent and you walk off, it's going to cost hundreds of millions of dollars. So you don't want to anger the talent. Let me put it that way. And they continued to not like one of the presenters on this show and continue to kind of force him out and irritate him till he clocked one of the producers. And that put the end to the show. And, of course, BBC has been horrible over the last probably 20 years. And they had to apologize for basically their coverage, war coverage for a number of years, and finally come back to their senses. But fairly interesting to see it. Now, when we look at Netflix, the question that I'm getting from Don, Don doesn't say where he's from. Anyway, Don is asking whether or not there's a possibility of a 3-gap play. And the problem with that is you'd want gaps about as you saw on that April 16th pop up here. And these smaller gaps up here are nice, but the thing is gappy all the time. Normally what you will see in a 3-gap play is not that many. Now, what I would say is that there's a possibility that you have one more coming. If I looked at that, you have one huge untested gap that's from 350 to 400, one huge untested gap from about 470 to 525. If this thing were to gap up and you'd get another, we'll say 30, 40 point gap in this stock. We've played this before in the den, and I think Mr. Z was one of the ones that played it, but I think it opened up at 390, I think it was at 390 and ended up going within a day to 330 and closing all the triple gaps in that. These stocks do end up having a personality over time. Netflix may be one of these. So I would be very careful. As long as this thing does not gap up with another 30, 40 point move, I would be very close at watching this and see, you know, if it does do that, you probably want to short it. If it doesn't do that, this thing can probably continue meandering its way higher. And it looks like it's just about there. I don't know when earnings are next on it, but let's take a quick look at here. I wouldn't be short this thing into earnings, let me put it that way. July 20th. So we've got about, 40 days? Something like that, 45 days, probably 30 trading days, 32 trading days. My guess is this thing will hold up. This small gap that we saw at $600 is not what I'm thinking of in a 3-gap play. It's these big, huge gaps. Let's go back here. We'll zoom in here a little bit. The gap on the 21st of January is the first one. The gap up on the 16th of April is the second one. And if we were to get a third one, you got to figure this thing goes to 700, 750. That's it. Anyway, yeah. We will see. Anyway, what else do I have going on out here? I think there was a few more stocks I wanted to look at. Of course, we were talking about how poor the music business is, and the aviation business has been horrible. Anytime you get just enough capability in the planes, enough coverage, everything goes to hell in a handbasket. We continue to see these really sell off hard. Part of that is everybody thought that crude would go to $10 maybe, and I'm thinking 53. But at this point, Love was off 5% today for Southwest. Looks like there's a fairly decent low back here at $28.52. And certainly the volume and everything else would say that we have a good opportunity to go test that $28.52 low. Maybe Love would be the one that happened. Lulu, we've been talking about for a while. I missed it and kind of kicked myself for it just because it had such a great low. But one of the problems out here with this low is it never got tested, so I could not pull the trigger. But I loved this setup, which is this thing gapped down on, what is that, June or July? That's June of 12th of 2014 on monstrous volume of 36.5 million shares. Got back in with it with 2 million shares, and I should have just gone ahead and pulled the trigger on it. I was hoping this thing would go below 36.25, that monster June 13th low of 2014, and I would get a snap on it, and it never did. And some of them will get away from you like that, but there's always another bust coming. But anytime you see, 10, 20% lows getting tested, I've got to throw money at that. And the only thing that happened here was it moved up before I got an opportunity. I don't chase. I have at least a thought of going through a lot of things in my life, but one thing I do not do is chase stocks up, no matter how good they tend to look. Calpine, what else do we have out here? Akamai is off at 3%. AKAM downgraded. A lot of these stocks are starting to basically be under pressure. This one, once it closed under on the day of the 28th of May, it had pretty much broken a fairly decent trend line, and you started seeing these things start to pull out. As long as Akamai is under the 3x3 displaced moving average, or even if you want to go and use the 9-day moving average, as long as it stays under that, this thing is on a sell signal. You've got a nice gap up that goes back to the 11th and 12th of 2015 that's February 11th and 12th. Almost 5 million shares or 4 million shares, depending on which one you want to use. That gap's still open. That gap is right at 69 to, no, it's not 69, excuse me. That's 63 to 64.5. And could it get back there? I think it could. You've got, a lot of energy back here on that 11th and 12th of February. Probably going to work its way back there, and that's where you would probably have to think about going long if that's what you were looking at. Synovus Energy, CVE, a lot of these energy companies look like they're making at least some temporary lows out here. The low of December 16th on CVE was December 16th, 2014, 7.4 million shares, $16.11. We've basically pierced it yesterday with 1.7 million shares. We're kind of back into that trading range now. So there are at least a few of these stocks that are looking like that they are basing out and enough. Again, you can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can post a message in the den, which is all consumed right now with the evacuation of the press briefing room in the White House that now has everybody back in it. I guess they found a ham sandwich that looked suspicious. Probably was on rye. What else do we have out here? We're talking about these energy stocks. And, we got a few of these out here. Let's see, there was another one I wanted to look at, but I can't remember what it was now. Oh, well, I will move on. Of stocks that are out here in the sector of biotech and pharmaceuticals, had this one over the last couple of days in the newsletter that looked to me extremely suspicious, but I have pretty much exactly what you would think, other than follow through on volume and a bust of that 9-day moving average if you were looking for that, which I probably would be before moving this up. But certainly looks like it's going to head back to its gap up, and that is 414 when this thing came up on 2.5 million shares. That's the last big volume day. My guess is this thing's going to work its way back in here. If you're unfamiliar with this stock, GW Pharmaceuticals, GWPH, they are the only company in the world that has a license from the U.S. government, the British, and the EU for developing drugs based on marijuana. And it's just tough for me to think that people are going to give up the drugs that really work for marijuana. They can give you a lot of pain relief with these particular drugs. The FDA is trying to make them take out a little bit of the buzz. And my guess is that a lot of people probably more interested in the buzz than the pain relief. There's a lot of drugs out there already that give pain relief. And eventually, the truth of this is probably going to meet somewhere in between, and my guess at a much lower price in this company. A lot of people, it's kind of like for years, all you heard was hemp was such a great product. Hemp is great. You got to have hemp. You got to have hemp this and hemp that. Everybody knew what everybody was saying. They wanted to smoke dope. They wanted to be able to grow it. And hemp was a good excuse for doing it. Unfortunately, this company probably has become a good excuse for smoking dope too. And I'm a libertarian, so have at it. Knock yourself out. But as far as reality and the price of this stock, my guess is that this thing's going to pull back a lot more than this $100 gap up. Fair value on this thing's probably back around in the 80s. And if we could get a nice pullback into the 80s, I may be interested in getting it too. I think it's just overshown a little bit. And of course, if marijuana is free to get at your local dispensary, just how far can these guys push their drug? Even though maybe it'll be even better than Maui Wowie and all the other names, the Pineapple Express, all the other names they give marijuana at those places. I do not partake, by the way. Other stocks. Oh, do we have enough time out here? Got into that. Sage, one of these heaven and hell stocks, up hugely today. Announced positive top-line data from its trial of Sage to treat postpartum depression. Raised $107 at some company I've never heard of. Gave back a huge amount of the pop here today. I'm not sure why. Maybe I'll get a chance to look at this during the break. In the meantime, give me a call, 877-927-6648. Email me at path@tfnn.com. And, of course, post a message in the den.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we get back, dollar index is off 17. And of course, you got to be watching the 10-year yield like a hawk these days, 2.4185%. And that's going to tell you a great deal about what's going on out here. Applied Sciences International Corporation, SAIC. You'll see them probably listed as that on most of financial infotainment shows. When we go back and look at that, earnings of 73 cents a share, 2 cents worse than estimates. Revenues rose 3.3%, a huge smackdown for this one back in the trading range. Volume did not increase all that much, not a huge volume stock, albeit, but this one looks like, I suspect, most of the biotechs out here, and that is that they're just getting a little bit tired of what's going on out here. BURL. One hot summer and no one wants to buy a jacket. This thing blew through its previous low of $50.24 on May 14th. We got 4 times the volume. We're going to come out of here with at least 4 times the volume. And a close below that $50.24 is probably everything you need to know. And of course, this is a tough company to get involved in through the summer. They are known for their heavy jackets, much more up north. Maybe this thing just had far too big a run because of last winter's cold winter, and now we're getting the hangover now after that. So maybe it's more of a cyclical stock, and a heavy winter means probably heavier sales in Burlington stores. Right now, of course, everybody probably out buying swimsuits. If you've been outside here in Tampa the last couple of days, it's that UV is pretty much pegged at number 10 right now. You just come out and feel like a magnifying glass is focused on you if the clouds aren't in the way at the moment. It's pretty beautiful if you're under a tree. If you're not under a tree, it can be pretty smacking hot. Anyway, a couple other stocks. Do we have time? Yeah, we got 2 minutes. If I can get to it. Come on. There we go. WWE, this is a stock that got clobbered not too long ago. It's getting back up into that candle where it did get clobbered on the 30th of March. This thing came down with, 7 million shares. Coming up into it today with 300,000 shares. That's even breaking that previous high of April 30th that had 2.3 million shares. This looks like a business that's probably rife with problems. Some of these other stocks out here that look very interesting to me are these Chinese internet companies that are dubious at best. We had an attempt to break through higher prices today on WBAI, which is 500.com. $25.63 on the May 20th high. 5.6 million shares. So we get in the last couple of days 3.7, 2.1 yesterday, today 3.5, but it went above it, pulled right back into it. And this continues the pattern that I've been talking about a great deal, and that is these stocks trying to break out. They do get out for a little bit, no volume, and they kind of pull right back in like a turtle or a prairie dog. Another one to watch for tomorrow is Tempur Sealy International. TPX, especially with housing sales starting to wane. This thing has given us a couple of dojis in the last few days, so you want to keep an eye on this one. TPX, basically half the volume at the high of the May 11th high, so keep an eye on that. In the meantime, sell when you can, not when you have to. Remember to catch me, same bat channel, same bat time, channel 14 on Tiger TV if you miss it live. Tom O'Brien for the next 2 hours, and then our friend Mr. Heck in the 5 o'clock hour, talking about commodities and other things. See you then.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.